It might be a consolation prize, but the Chinese did get their hands on a chunk of Australian mining assets this week with a US $1.4 billion deal to buy most of Oz Minerals' troubled business. Even then, Minmetals' victory was somewhat qualified, given it was forced at the last minute to sweeten the deal and bid against itself. And the federal government banned it from getting the best asset, the Prominent Hill mine, which stays with existing Oz Minerals shareholders. Kathy Swan reports.
There was really no doubt about the outcome of Oz Minerals' AGM and the vote on China's Minmetals' sweetened offer to buy all but one of Oz's major assets for a sniff under $1.4 billion US.
Well, I bought some Oxiana first.
But the fall from grace for once ambitious resource companies Oxiana and Zinifex in just under a year after merging to form Oz Minerals was hard to accept for many smaller shareholders.
I'm going to vote no, but I don't think it'll make much difference.
Under the Minmetals deal, Oz Minerals sells the Golden Grove mine in WA, Century Zinc mine and Dugald River project in Queensland, Rosebery and Avebury mines in Tasmania, overseas assets in Laos and Canada, as well as all other exploration and development assets. What shareholders and Oz Minerals get to keep is basically Prominent Hill in South Australia.
I'd rather Minmetals not get it, but I don't think we can afford not to vote for it.
Money from the asset sale will be used to pay off a $1 billion debt and keep the banks happy ahead of their June 30 deadline to pay up or else. But shareholders filing in to vote wanted to vent their anger at a board they feel has let them down. And the question for many was, how did the company come to this?
The issue for Oz was that, we're base metals. We got hit faster than the iron ore, coal, minerals companies who have long-term contracts, set prices.
Oz Minerals CEO Andrew Mitchellmore, who's leaving to take up a new job at Minmetals, says last year's financial crisis and credit squeeze were a nasty combination.
We take instantaneous prices off the LME, so base metals get hit faster and earlier. Also, the banking facilities, the banks saying they wanted all their money back. As the analogy today, it's like someone coming along and saying, I want all you got to repay your mortgage, and I want it tomorrow.
I think you have to go back, first of all, to the period just after the Zinifex restructuring, where they were sitting on a large amount of cash.
Lead and zinc producer Zinifex clawed its way out of failed miner Pasminko's grave in 2004 and in the lead-up to its 2008 merger with Oxiana went out shopping and paid top dollar for the Avebury nickel project in Tasmania. Global Mining Investments Chairman John Robinson says what happened next is everything that could go wrong did.
It happened just prior to the market going bad. The renegotiation of the debt structure that was necessary because of the merger of the two entities started to reach a sort of peak during the time when the credit markets were in a lot of trouble. So that made it very difficult. And at the same time, of course, cash was being consumed at a rapid rate of knots by Prominent Hill, and cash flow from operations was falling as metal prices were falling.
Obviously, the finger's been pointed very firmly at Oz for buying assets overpriced, but the fact was that they paid with scrip, so scrip for scrip usually is reasonably fair.
Kathy Moises, Senior Research Analyst at Evans & Partners, says Oz was caught out by bad timing and nervous banks.
If it wasn't for the banks forcing the hand, I think Oz could probably have traded their way out of it and would still hold all the assets.
They did play a very hard game. They forced the situation, and at the end of the day it left shareholders with little option but to vote for the deal.
But Oz was also too slow in warning shareholders about the balance sheet's reversal.
Over the period late last year where they went from being cash debt neutral to roughly $1 billion worth of debt, which really triggered the banks to force refinancing at that stage. And I think there should have been more market disclosures.
A desperate project of cost-cutting and mothballing alone wasn't going to save Oz Minerals. Outgoing Chairman Barry Cusack says they needed Minmetals.
When they came and rescued us, they made what was, I thought, a very generous offer at the time, and thank gosh they did. But the market has moved up a bit.
Minmetals first bid for everything, but got knocked back on national security concerns over Oz's best asset, Prominent Hill. They came back with a $1.2 billion bid to buy nearly everything else, and then upped that bid by 15% at the last minute, despite every other contender either failing to show or deemed unworthy.
We seriously considered the other offers that were available to us in terms of equity refinancing, and we were only interested in what was the best outcome.
Oz Minerals has at least one initial market approval, gaining 13% after resuming trading on Friday. But while the debt-free, cashed-up one-mine company is talking about maybe buying more assets, it could also be mistaken for a takeover target. But potential buyers would be limited to a fairly small pool, given the federal government's determination that Prominent Hill must remain in Australian hands.